Welcome to the Explainer. Ever wanted to trade one type of crypto for another without going through a bunch of complicated steps? Or maybe you've wondered how people get their hands on the newest tokens in decentralized finance? Well, you are in the right place. Today, we're going to break down crypto swaps. They're basically the engine that powers a huge chunk of the digital economy. Easiest way to wrap your head around a swap is with this idea right here. Think of it just like trading Pokemon cards, but for the digital world. You've got a token someone else wants. They've got one you want, and boom, you make a direct trade. It's a simple but really powerful concept that's key to everything else we're about to cover.
Okay, so that trading card analogy is a perfect start, but let's level up from the playground to your portfolio. What does a crypto swap actually look like in practice? And how does this simple kind of exchange power the super complex world of DeFi?
So at its very core, a swap is just a direct peer-to-peer trade. You've got token A, you want token B, and a swap lets you do just that. But the really important phrase here is without a traditional centralized exchange. That one little difference, that's what unlocks access to literally thousands of new tokens and decentralized apps that you just won't find on the big mainstream platforms.
But here's the thing, not all swaps are created equal. Where you do the swap is just as important as what you're swapping. It can happen either directly on the public blockchain for everyone to see, or inside a private company's database. And trust me, understanding that difference is absolutely crucial for managing your assets and your risk.
And this slide really boils it down to the fundamental choice every crypto user has to make: control versus convenience. On-chain swaps, the kind you do on places like Uniswap, are written onto a public ledger. They give you total transparency, and this is huge. You never give up custody of your assets. But off-chain swaps on exchanges like Coinbase, they're often way faster and feel simpler. So it really makes you ask yourself, what do I care about more right now? Total control or just pure convenience?
Okay, so we've got this really powerful tool, and we've got two different places where we can use it. But what's the point? Why are literally millions of people swapping crypto every single day? Let's get into the practical, real-world reasons.
Honestly, you should think of swapping as your passport to the rest of the crypto universe. It's about so much more than just diversifying. You want to get into a hot new decentralized finance protocol or play the latest blockchain game? Yep, you're going to need to swap for their specific token. See an NFT you just have to have? You'll probably have to swap for the right currency to buy it. A swap is the action that takes you from being a spectator to being a real participant.
All right, now before we get into the risks, we've got to clear something up. This is a common point of confusion that trips a lot of people up. A token swap, that's an action you choose to do, is totally different from a token migration. A migration is something the whole project does, kind of like a big software update, where your old tokens just automatically get converted to new ones. One is a personal trade you make, the other is a network-wide upgrade. Big difference.
Of course, with a tool this powerful, you've got to be careful. Swaps open up this incredible world of opportunity, but they definitely come with their own unique risks. Understanding what could go wrong is always the first step to making sure it doesn't.
So what are these primary risks? Well, the really fascinating part is that the dangers you're going to face are directly tied to that choice we talked about earlier. Are you swapping on-chain or are you doing it off-chain?
This chart just highlights it perfectly. Your risks totally change based on your environment. When you're on-chain, you're dealing with market volatility, stuff like slippage, and you're basically putting your trust in the code of the smart contract. But when you're off-chain, you're putting your trust in the company itself, trusting that they won't fail and that their security is good enough to stop hackers. The takeaway here is that there's no risk-free option, just different kinds of risk that you need to know how to manage.
And hey, there's one more risk that exists totally outside of the code and the markets: taxes. This is so critical and so easy to forget when you're in the middle of a trade. In most countries, swapping one crypto for another is considered a taxable event, just as if you were selling a stock. So you've always got to be aware of the tax laws where you live, because they absolutely apply here.
All right, we've covered the what, the why, and what to watch out for. Now for the fun part. How do you actually do one? Let's walk through the basic steps for a decentralized swap, since that's the kind where you are 100% in control of the entire process.
The process itself is actually surprisingly straightforward. First, you connect your wallet. That's like your ID and your bank account all in one. Then, you just pick the tokens and the amount. But, and this is important, pause on step 4, review details and fees. This is the most crucial moment of the whole thing. You have to double-check the rates and any fees before you hit confirm in step 5. After that, the blockchain just does its thing, and the new tokens will show up safely in your wallet.
So, as you can see, a crypto swap is so much more than just a simple trade. It's really the key that unlocks decentralized finance, it's the gateway to new gaming worlds, and it's the tool you use to collect digital art. It gives you the power to navigate the Web3 world on your own terms. The only question left is, with this key now in your hand, which door are you going to open first?